Hello, guys, and welcome back to Exit or Die, the podcast for founders, investors, and for sure all the people who actually get shit done in the startup ecosystem. Today, I'm joined by Raymond Luk, serial founder, investor, and the force behind Source Canada, a national summit aiming to fix one of Canada's biggest startup problems. Companies are building great tech, but no one is buying it. Same problem as here in Austria, at least not in the home country. Raymond has built and exited companies like Flow, what was acquired by Deloitte, Hockey Stick, Scalability, and helped shape the earliest stages of Canadian tech through Year One Labs, a pre-idea venture studio with a 7x return. Now he's on a mission to push Canada's biggest corporation to actually buy Canadian technology and stop sending innovation dollars abroad. Raymond, welcome to Exit or Die.
Thank you, Peter. It's great to be here. We need to talk about the name of your podcast. I'm assuming that at the end of the podcast, either your guests have an exit, or it's like Squid Game where there's like flames come up underneath their chair or something, right?
Yeah, definitely. So let's do that after this session. Raymond, let's start with the obvious. Canada produces amazing tech, amazing startups, also as we here in Austria, right? But the exits and the customers are often somewhere else. What's the problem?
Yeah, there's a lot, right? Canada, we're fortunate in a way we live next to a very large, very successful country, and the number one, most successful country in the planet when it comes to technology, right? And so, I mean this very sincerely, that it's been a huge benefit to Canadian entrepreneurs to be, a flight away from Silicon Valley and Boston and New York, and all of us who have been entrepreneurs in Canada spent a lot of time in the United States, so raising capital, selling, learning, meeting other founders. In fact, Canada has an entire association called the C100 that is just an association of Canadians who live in Silicon Valley, right? So there's a lot of benefits. I'd say that one of the disadvantages is that being close to a large successful country, it's really easy just to say, well, we're just going to go there and be successful, right? That's the thing that Canadians are always like wake up at night worried about is brain drain, that somehow all of our best people are moving abroad. And I think other countries around the world who are next to large, like New Zealand's next to Australia, and Estonia is next to a very large country. And, there's a lot of, we're not the only ones, and there are pros and cons, but I think that for Canada, it's more than that. I think the brain drain is something Canadians say because it's not our fault, right? It's not our fault that we're next to the United States. So, oh well. But I think there are deeper cultural issues that I think Canadians, when we think about success, we think about American success. Right. So we have a harder time defining Canadian success. And it's almost like I kind of call this the Canadian founder playbook, where you, in order to be seen as successful, for example, before somebody like a large Canadian company is ready to buy from you, they say, go to the United States and sell. And if you can do that, then we'll buy from you, which is really a dumb, backwards way of doing things. But that's partly the Canadian mindset.
Yeah. We already talked before the podcast, and we have the same problem here in Austria, that Austrian people buy all the US stuff and technology, right? And here people say when you are successful in the US, you can also be successful here in Europe. It's a mindset problem. And yeah, all in all, so there's not a startup problem, right? So it's a buyer problem also in Canada,
I believe.
and I think also in Europe. So what do you think? What does that mean in practice?
Yeah. It is a buyer problem. I think, listen, we live in a world where it's kind of dominated by, these hyperscale companies and the Googles and Amazons and of the world, and that's partly just the way the technological landscape, right?
Mm,
But I think that it's, I think that recently, at least, there's been more awareness that there are definitely advantages, right? Buying from hyperscale companies, like
mm,
cost lower, scale, scalability is higher. In theory, the more features, etc. That's why products have been built that way. But there are some disadvantages as well. I mean, one of them being data privacy and data,
exactly.
this newly emerging notion of data sovereignty. And I don't know if you saw that case with Microsoft in France, where they were testifying to a government committee, and the committee asked, well, if um, there was a American government request for the data of a French citizen, and
Mm,
that French citizens' data was hosted on Azure or something, we assume that the answer, you will say no because, you're in France operating as Microsoft France and you abide by the laws of France. And the
exactly.
Microsoft answer was not really. Of course, it'll never
Mm,
happen. We
yeah.
promise to be nice, but if it, push came to shove, um, we can't say that we wouldn't say no to an American request for government French data. And maybe this is a hypothetical case,
Mm,
but I think more countries are aware that, okay, there are some advantages to, or I'd say, like, think of it this way, that having a domestic technology base, just like, being able to manufacture N95 masks
mhm,
domestically or vaccines domestically has an advantage to a country's sovereignty, because not having it means that you have to rely on other people, right? Your allies, your friends. And of course, Canada is feeling, and I don't speak for all of Canada, of course, but
mhm,
speaking for myself, having our good friends, say we want you to be the 51st state.
yeah.
We are going to apply tariffs, and that's I think Americans may not really understand this, but that really was a shock to Canada. I think it's a shock that we needed.
Mm,
Of course, we still have Americans. Like, half my family is American, and all of our friends are American. But it kind of made us realize that there is a border, and in
yeah.
some cases, um, that border is, actually important, and we actually need to take care of our own business. So I think that's something common to, I think, Austria, to Canada, and to other
Exactly.
smaller countries.
Yeah, I mean that's the same here in Austria. So people woke up because all the tax fines from from US and all the stuff, and then they already think about, okay, we have to work more on our economy to grow
Yeah,
and to scale more, right?
yeah.
Um, and
And
I
and and what, like, one point that I'll make about the, because we're all fixated, especially now, on AI and kind of the race, like the building data centers, and it's kind of like an arms race, and the person who
mm,
has the most GPUs and the most energy wins. But I think that we have to remember that in our world, let's say startups and innovation, um, like OpenAI didn't exist like a few years ago, right?
yeah,
So I think people have to remember that when the pace of innovation's fast, it means that large incumbents, they will always have some advantages, but they'll
mhm,
also have a lot of disadvantages, right? That the next disruptive technology, there's no reason it can't be created in Vienna. It
yeah,
doesn't have to be created in Palo Alto, right?
mm,
That's faster things go, the more that can be the case. And I don't believe that it's just the people with the most money win.
yeah, yeah. And I think the gap is going bigger and bigger, right? And for that, you founded Source Canada to fix that gap, to connect Canadian startups with corporation clients. So, what's the vision and what's the mission behind the event, the summit?
Yeah. Yeah, well, we had our first event just a few weeks ago, and this was so Source Canada is more than an event. It's the mission. I think of it like a startup, right? A
Mm,
good startup is when you have a mission that's really impossible to achieve, right? In
yeah,
my mind, that is, you know, large corporations really easily and happily buy from startups, and in a way, I think it's somewhat impossible to achieve.
Mm.
Not that we can't make progress, but I think of it like, what is, like at the heart of a good startup is a disagreement, right? If you're
Yeah.
happy with how everything is going, just don't start a company, please.
Yeah.
But if you disagree with something, then it fires you up. You want to change it. So for me, I disagree that large Canadian companies should just wait for startups to go to the United States or abroad before they're willing to write a check or spend some money. I don't agree with that. And so Source Canada was born to think about, well, why is that? Like, why
Mm.
do these things happen? And we did the first event really rapidly, in 76 days from
Wow.
launch to event. And we had 250 people there. We had the top startups in Canada. We had 40 of the largest corporations in Canada. And and partly what we're trying to do is solve the problem of most large companies don't know any startups,
Yeah.
right? So they've never met a startup, and
Mm.
so it's weird to them. It seems like, no, I don't want to meet you. You're weird. Um, so I think part of it was getting them in the room, and then this event was structured as small meeting rooms. So we really forced
Mm.
people into small meeting rooms where they could get to know each other and build bridges and kind of demystify startups, and partly to start to think about, well, why is it why is it so difficult for large companies to buy, let's say a large bank, to buy
Mhm.
from a small fintech company,
Mm.
especially when that fintech company has sold to American banks, right? Um, so the mission is really to kind of ask ourselves, like, why do these barriers exist in Canada, and to start to chip away at them, kind of one by one. So
Mhm.
one thing that it's still early in the mission of, it's only been like 3 months, but one of the things that we figured out is that, um, large companies, their procurement systems really don't take into account new ventures at
Mm.
all,
Yeah.
right? So when they look at, like, I want to buy paper cups from a large vendor or a small vendor,
Mm.
they're kind of more similar because it's a commodity, but they don't think about, how do I procure a solution to a problem I don't even know exists,
Yeah.
right?
Mhm.
It's tomorrow's problems. It's
Exactly.
innovation, right? So,
Yeah. Yeah.
um, so I think this is where large companies can really learn from the startup ecosystem and venture capital, and of, you know, at the beginning, the most innovative companies look strange. They don't look
Mm.
like large companies. They're all risky. They're all default dead, like Paul Graham says. And But those are not reasons not to buy from startups. Those are the reasons to buy, because,
Yeah.
if you've read The Innovator's Dilemma, that the larger a company is, the less innovative it's going to be. So those Canadian companies desperately need, and Canada actually, compared to other countries in the OECD, we invest less in R&D, less in innovation. So
Mm.
we have the startups, but we have this barrier that they're like, wait a minute. So how many years have you been in business? And the answer would
Mhm.
be like 6 months. Like, no,
Yeah.
come talk to us in 3 years.
Mm.
Right.
That's very interesting. So, well, I name these corporations old economy
Yeah.
companies because they have an old mindset. They
Yeah.
have old strategies. They are too slow, and for me, would be interesting. What's your first learning of, or what's the learning from the first event?
Yeah.
Do you think that startups are too fast with software creation,
Mm.
development, and all the stuff? What do they tell you?
Yeah. I think the main thing is just that I've seen, talking to, these kind of corporate innovation or corporate
Mhm.
procurement, is that what they're telling me is that they see the innovation, they want to find a way, they just don't have the systems
Mm.
in place, because their systems are for, let's say you're in a regulated industry, you're in government or you're banking or energy or
Mm.
something. The procurement focus is all filters for saying no, right? Do you
Yeah.
meet this
Mm.
security certification, environmental certification? So it's easy for large companies to
Exactly.
satisfy that because they have 100 people working in that department. But like you said, these old world companies, in order for that old world company to buy from a startup, for now at least, maybe AI will change this, but there's a person at that large company whose job it is to find innovative startups. In most companies,
Mm.
there's nobody,
Yeah.
right?
Mm.
In some corporations, there are, like, let's say, the corporate development M&A group, or there's somebody who actually has a hat that says innovation on it. That's a great sign because that person's job is to find, let's say they report to the CIO.
Yeah.
Um, like Deloitte has this, a whole office of disruption and innovation. So those are the companies that are further ahead. Um, I'd say even in those cases, um, it's not as sophisticated, let's say, as a VC would be. VCs, they know how to scan, scout.
Mm.
They know how to. They have their own, or either they know or they feel they know how to pick companies. They probably
Yeah.
more feel
Yeah.
they know than actually know, but
Mm.
but they have a system. So I think that if you ask me, the main thing I learned is that most companies, they have the desire, right? And
Mm.
especially in Canada right now, there's a very strong desire to buy Canadian. But even if they get all excited coming to a Source Canada event, they don't have the people, the structure, the process yet.
Mm.
So that's something that we're thinking about helping to try to build.
Yeah, and they are also too slow to implement because they have very complex structures in the software background and
Yeah,
and all the things.
yeah.
So
I mean,
yeah, they.
it's one of the reasons that
Mm.
when I came up with this idea, I said I want to do it as fast as possible. Even though
Yeah.
if you've ever run an event, the worst thing you can do is go fast, right? It's like so stressful.
Yeah.
It's everything that is bad about events is magnified if you try to do it in 76 days. But I said that another, there's like tie for 5 number one problems in Canada, and one of them is we're slow.
Yeah.
So you can't be innovative and be slow. Those are opposite
Exactly.
things. So
Yeah.
I wanted to say that if because in Canada, we love waiting for the government to create a funding program and an innovation
Yeah.
department
Mm.
and then hire a bunch of people to create Source Canada. And I said, I'm
Mm.
just going to do it with myself, one person. I'm going to fund it myself out of my
Yeah.
own pocket, and then
Mm.
we get sponsors, and I'm going to do it in 76 days, partly as a challenge to other people that if I can do this as one person, then
Mm.
all of you who have teams and money and funding and all that stuff, you could do it even faster than me, and let's do it, right?
Yeah.
But
Yeah.
the default is great. We'll see you in 18 months.
Mm. Yeah, I mean that leads me to the next thing. So you have done deals, you raised funds, sold companies. What needs to happen structurally for Canadian tech companies to stay Canadian and scale these companies?
Yeah, I think like partly what needs to happen is really procurement. Like, I know I've said this, but
Mm.
the easy answer, right, is we need more funding, right? And Canadian companies are undercapitalized, especially at the early stage compared to
Mm.
the United States. And then when they are capitalized, a lot of that capital comes from outside of Canada. So, which I don't really necessarily have a problem with, but um, I think capital is a problem, and government is already. I mean, the Canadian venture capital industry is primarily a government funded industry, right?
Yeah.
Um, the government entities are the number one limited partner in almost all Canadian VCs. And but I think the other thing is really procurement. That I think um, it's if Canadian companies get customers like paid pilots and customers
Mm.
earlier,
Yeah.
then it does partly solves that capitalization problem. Because if you're a VC and you see a company with 1 million in revenue or 500,000 in revenue, one of
Mm.
them seems more valuable. It's going to have a higher valuation. You're going to
Yeah.
write a bigger check,
Mm.
and then it's a flywheel. It's a positive flywheel.
Yeah.
I'm not
Yeah.
saying procurement solves every single problem, but it's I think it closes that gap of
Mm.
helping companies capitalize. But it also, with scale, now that companies start to think we're entering the international market already bigger
Mm.
than when we were before.
Yeah.
And then it starts to change the mindset that we can be acquirers,
Mm.
even though this podcast is called Exit or Die, but
Mm.
really it should be like, grow and live, right? You don't have to exit.
Yeah.
You
Yeah.
can be the,
Mm.
you can be the buyer. Um, it comes back to, there are cultural problems of
Mm.
large companies just don't consider a priority to buy small companies. And then if they do buy small Canadian companies, that's the reason Source Canada exists. If that problem didn't, it's so clear, the problem we're trying to
Yeah.
solve. And but there's a lot of, it's not just procurement, but procurement, I
Mm.
think, is the number one thing.
Yeah. I mean, there's also the part with the risk, right? So what I see here, for example, in Austria or in Europe, VCs are investing, but focusing on scale ups and
Yeah.
don't want to have the risk to invest in small companies, in maybe pre-seed companies, right?
Yeah.
And you mentioned the example with the company with 1 million revenue and the other one with 500,000.
Yeah.
Maybe the company with the 500,000 revenue is maybe a unicorn and the other one not. You can
Yeah.
scale it maybe faster, right? But the
Sure.
unicorn is maybe the other one. And I think so all VCs and all investors have to risk a little bit more.
Yeah.
So
100%.
it's uh,
Yeah. I mean, like, to kind of, argue against myself, like against that $1 million example, I 100% agree with you that the company with no revenue could be better than the company with a
mm,
million in revenue. I do think that, ironically, um, you know, VCs have become risk averse. I think for some reason, every VC wants to be a private equity fund
mm,
when they grow up. But, you know, there's a great fund, I think it's in Belgium, right? Hummingbird. Um, they're one of the most successful VCs in the world in
yeah,
terms of long-term, ability to pick winners. And the way they do it is they're one of the few who have the courage to invest in outliers.
yeah,
So, you know how every fund has a thesis? They're like, their last investment, in a biotech company, I don't remember the name, but it went public and they said, we've never done a biotech deal. We know nothing about biotech, but we just knew the founder was one of those
mm,
outliers. And we said, let's go for it. And they've done that with investing in neurodiverse founders. And they said, you know what? I think there's a positive correlation between neurodiversity and being an outlier. Let's just invest in those people. Nobody else has that courage to
yeah,
do that.
yeah.
Um, so, those other examples you said of people looking for scale and kind of obvious metrics, I bet the
Mm.
returns are mediocre.
Yeah, that's again a mindset problem on the VC side, right?
Yeah.
Let's talk a little bit about the founder mindset.
Yeah.
You have built 5 companies, sold several, raised venture capital. You built without venture capital, ran a fund. Um, what's the one thing you wish you knew earlier?
I think that I wish I knew that, you know, after all of the learning of things you're supposed to do and all the terminology and all the kind of founder advice, I think that if I go back, I'd say in the end, none of that matters, right?
Mm,
The game you're playing is, um, have a reason that your company, this disagreement that I was talking about, have some innovative, um, bet that's at the heart of your company. Beat your head against the wall until either it's true or it's not true. And it's sort of like, how do you make sales? You can read books on sales and learn frameworks, or you can
mm,
pick up the phone or write cold emails. I really think that, we've kind of gotten away from the fundamental, challenges of building early stage companies. It's not supposed to be easy or standard, but
mm,
I think there's this professionalization that I certainly learned over my career, that you're supposed to know how to do all these things, which is true, but it doesn't move the needle when you're going from 0 to 1 to 10 million. What moves the needle at the beginning is, your willingness to suffer and beat your head against the wall
mm,
and be okay with it, because, that's like the reason that we talk about pivot, right? Pivot's become this weird term where it's like, out in society, everyone's talking about career pivots, but the idea of a pivot originally wasn't like a badge of honor of like, yay, I pivoted. And it was really, I have to pivot because at the beginning of my company, I don't really know what it is yet, right? That's
exactly.
partly the definition of a
Mm,
startup is it's an experiment, but you could be wrong. And you pivot because in the absence of information, you have to go out and get the data. And when
mm,
you get the data, you have this creative leap of faith that, oh, I talked to all these people. I was trying to sell them an energy drink, but it turns out they wanted accounting software, and that would be a really hard pivot. But, um, I I've decided to go over here.
Yeah.
And that's the creative journey of building a startup that I think a lot of people have forgotten about in the
Mm.
rush to force startups to look the same, right?
Yeah.
You got
Yeah.
your pitch deck should look the same, your metrics should look the same, your founders should look the same. I mean, unfortunately, most founders who look a certain way, like men,
Mm.
Apple are still getting all the funding. That's not necessarily something good for innovation, but
Yeah. Yeah.
that's a whole other topic about how people pick winners or they don't. But I'd say if I would give myself advice is be open minded, but there's no shortcut. You
Mm.
still have to go do the work. You still have to beat your head against the wall.
Yeah. And yeah, in my opinion, you have to try, you have to fail, to stand up and try again, right? And you mentioned the pivot. So I had to smile because I already thought again to the old economy companies, because I think only startups can really do a pivot, because they are fast enough. They know exactly, okay, I did a mistake in the past, and now it's the future.
Yeah.
I have to turn all the I have yeah
Yeah.
I have to try
Oh,
again, and all the stuff, right?
it's this is the perfect example is like it's so difficult to change when you're a large
Yeah.
company because you have people's careers that are in one direction.
Mm.
You have incentive structures, how they're paid
Mm.
and how they're promoted. You have your legal structures, maybe even your
Mm.
IT. It's just pushing you in one direction. So it's impossible to switch that ship.
Mm.
When you're a small startup in a canoe, it's very easy.
Exactly.
Right? You have
Yeah.
nothing to lose,
Mm.
and that we were talking about this earlier. That's why large companies should work with small, because large companies develop this mindset that everything is impossible.
Yeah. Yeah.
Small companies are. I did that before lunch today.
Yeah. Yeah. Exactly. And I already mentioned it. So try, stand up, fail,
Yeah.
and make mistakes, right? So then you only can learn.
Yeah.
So can you mention a few common mistakes what you already see in early stage founders today,
Sure.
especially when it comes to storytelling, fundraising, and all the basics?
Yeah. I mean, I started, years ago, started writing about founder topics, and I kind of naturally fell into fundraising and storytelling.
Oh,
Um, Partly just because I was so annoyed that, um, like I've been doing this for 30 years. I started my first company 30 years ago, and
well,
it's kind of a sad state of we really haven't made progress. We're
mm,
still, if you go back in time, 30 years ago to a tech event, and then you go to tech events today, they're exactly the same. There's
yeah.
been no progress. It seems like nobody has learned anything because we're still talking about pitching and fundraising in exactly the same way that we used to. And it's
Mm,
not because it works, because I think fundraising and pitching is super inefficient. So I started thinking about, you know, why can, why are entrepreneurs not mastering these basic skills of pitching and storytelling? And in teaching it and writing about it, it's a great example. If you want to learn something, teach it.
mhm,
I kind of realized that the number one problem with storytelling is that our founders they're basically saying like, tell me what to do and I'll do it. Like
yeah.
they
Yeah.
want rules to follow, and they
Exactly.
want to be conventional. One of the reasons for that is if you listen to every VC, they're always giving advice and this is what your pitch should be. I mean, I've written some of that
Mm,
advice, and but the problem is not the advice or the pitch deck. The problem is when you're telling a entrepreneur, you should be conventional. This is the
mm,
standard way. That makes no sense because if you're a standard startup, you're gonna die. You have to be different
exactly.
to
Yeah.
win, right?
Yeah.
So so I think just talking about pitching and storytelling, the biggest mistake founders make is they try to copy other people. Like they have these websites where you can download other people's pitch decks.
Mm,
And like, why would you want to download somebody else's pitch deck? Most of them are bad. Um, and so the storytelling, like I teach this, nobody thinks about this, that how do you make your story surprising? Like nobody has ever given that
mm,
advice in the history of pitch decks. Is like, how do you surprise people? If you don't surprise them, your pitch has no chance, right? Your company has no chance. How do you tell a different story than people are expecting,
Yeah.
right? How do you
Mm,
basically position yourself as an outlier?
mm,
Instead of being the same as everybody, how do you seem different? I think that that might mean that some of those conventional VCs don't know what to do with you. Um, but those are probably not the right investors for you. And fundraising is something you're going to do like 4 or 5 times over the course of your startup. But telling an original pitch and original story is something you're going to do to recruit your founders,
mm,
recruit your board, your advisors, close sales, figure out what to do with your product. That storytelling, I think, if you do it right, it sets the DNA of the company. The worst way to do it is, I see this happen all the time now. It's somebody starts a company and then they had to chart out that hockey stick, the SaaS metrics, and they just want to fulfill those at all costs. But it's such a dumb way to start a company because
mm,
you don't have anything yet. You don't have an
mm,
innovation. You
yeah.
don't have metrics. And
Mm,
um, so I think that we've lost that surprise factor, that outlier,
yeah.
and that's why so many startups look the same.
Mm. I think you earlier talked about founder in residence. So you have also launched two really great projects, founder in residence, where you write about founder mindset,
Yeah.
and Swagger VC, a board game about how venture capital really works. So,
Yes.
what inspired you to create those two great projects?
Yeah. I mean, we could have a whole separate podcast just on how I think board games and gaming are a
Mm,
really overlooked way of teaching. Um, so, but just on founder in residence, that's really just where I write, I teach around topics that I think other people have overlooked. Right. So,
yeah.
I write about like cap tables, where I think most people still don't really understand how cap tables work. So I
Mm,
do a session, like a video, where I take kids blocks and I make really sophisticated cap tables with like you know l- liquidation preferences and convertible notes, but I do it without math to
mhm.
teach people how actually cap tables work.
Okay.
And so I didn't wake up and say I wanted to do that. I just said, like, why do people not understand
Mm,
ownership of their own companies? And I figured out it's not because they don't know Excel, it's because they don't understand the concept. So
mm,
the same thing with this venture capital board game called Swagger, which should be, hoping to release it early next year. But um, you've probably sat in lectures or something about how venture capital works and the power law and the
yeah.
map, and
Mm,
it's super boring. So I used to teach those workshops, and I was the instructor, and I found it boring. So I can only imagine what my poor students felt. But I said the main issue is not teaching like the rules, the kind of the structure in a spreadsheet. It's number one, that the founders should learn by being a VC, right?
mm,
That's going to take 10 years to actually raise a fund and be a VC, but we could do it in a board game. So the board game works like you have 4 players, each has their own fund, and then
mhm.
they make investment decisions. They kind of, um, things happen, like bad shit happens,
Yeah,
and
yeah.
then they compete over 8 years to have the highest fund returns. And it's a really interesting. I've done this with hundreds and hundreds of founders, and it's
Mm,
really interesting that I'll give you one example that founders, let's say, anyone who's raised money is really annoyed that VCs are always beating them down on their valuation,
yeah.
and they don't understand, and they're really offended. I've been
Mm,
offended when they play Swagger. Immediately, they're on the other side
mhm.
without me explaining. I just explain the rules to them,
Yeah.
and they are really crafty with lowering the valuation
Mm,
because they want to own more of the company because they have limited capital and they only have 8 years. So by playing the game instinctively, they fully understand venture capital
mm,
in an hour and a half.
yeah.
So that's like, been a really successful way to teach people venture capital, and it's just kind of a fun game you could play with your family. But it's what is kind of surprising and shocking when I play is that even experienced investors who play, it's kind of sometimes they don't they I see their strategy and I think, is that actually how you invest in your fund? Because
Mhm.
the weird strategy. And then at the end of the
Yeah.
game, they realize, wait a minute, I tripled my fund, but I didn't beat the market. I if I would
Mm,
have invested in the S&P 500 or or an index fund, I would have also tripled my money at zero risk, right? Over 8 years.
Yeah.
So those are just some fun concepts that are, again, super boring to talk about, but really fun to play.
Yeah. Yeah, then let's directly talk about the startup game. So, what's your take on how founders, especially let's say first time founders, should think differently about the startup game?
Yeah, I mean, I think there's just a lot of distractions. I mean, they should not think about raising money. I think that's probably there's a huge, like the reason we talk so much about fundraising is because it's part of the venture capital, top of the funnel marketing, right? They need to market, but still for most people, you don't need funding or you shouldn't have it. Um, so I think it kind of comes down to, it's kind of almost like thinking about what is starting a company. It's not the money you have in the bank, the praise you get on TechCrunch or the Wall Street Journal. It's not fun necessarily. It's fun because you're
Yeah.
passionate about it. It's not a great lifestyle. That's
Mm.
what starting a new innovative company is. And so I think it's the more you accept that that's what it is. Even I think even at YC, um, it's not fancy, right? It's not like the world's most, like in Canada. I don't know if this is the case in Europe, but in Canada, we love build startup buildings, right?
Yeah.
There's like dumb idea that we're going to take half a billion dollars or $100 million and build a
Mm.
building,
Yeah.
fancy in a very expensive part of town.
Mm.
And nobody can ever explain why. It's like, well, but why? It's like, because we want to have the fancy building. And once the building is there, good things will happen. But this is not true. But so my whole point was that I think if early stage founders understand that you're in for a very difficult ride, but it's also
Mm.
okay that it's difficult. It's the same as for everybody. You're going to fail. You're going to make a lot of mistakes. You're going to
Mm.
feel shame. You're going to feel frustration. But that is the journey of an innovative startup. You're literally earning your intellectual property
Yeah.
by
Mm.
wandering around. Later on, once you've figured out a little bit, then SaaS metrics, scale,
Mm.
venture, all
Yeah.
that wonderful stuff. Before that, you're supposed to be a mad scientist,
Yeah.
right?
Yeah.
I think we've lost a lot of that.
Yeah, for sure. Yeah. You have to work on that. You have to collect all these datas, and then you maybe later you have time to build all these metrics, and you
Yeah.
can do the analytics. But
Yeah.
yeah.
It's one of the reasons why I think going back to fundraising,
Mm.
raising money too early is really can kill the company because
Mm.
if you go backwards, you think, okay, I need to raise money for some, because need to raise money. They want these metrics, so I need to get those metrics.
Mm.
Then I'm going to build a product to get those metrics, and then I'm going to hire the right people to get those metrics. Just that the goal for some reason is raising money, but that can get you to those metrics. But your company can be rotten, right? There can be nothing else, but you can hit the $1 million milestone, and then so many companies fail after that.
Mm.
Instead of
Yeah.
thinking, forgetting about fundraising, you should just take as long as you need to build a company. Forget what everyone else says about how fast. You should actually, I mean, I think the counter advice I give people is go as slow as possible at the beginning. Like
Okay.
nobody cares. Like, does anyone
Yeah.
remember how many years OpenAI took to get to whatever? No, nobody cares.
Exactly. That's interesting because a lot of people say you have to be so fast. How like ChatGPT, OpenAI,
Yeah.
Meta, and all these companies, right?
Yeah. But number one, most people don't know those stories at all. So they don't
Yeah.
understand how slow it was. I mean, like
Mm.
Airbnb is a good example of like just pivot after pivot after pivot. And
Mm.
I think that we need to get back to, like, of course it's going to take long, because if it's really fast and it's like, if I could do it in a weekend, vibe code, whatever in a weekend, so can you.
Yeah.
And so the value is low. If it
Mm.
takes me, 2 years to really figure out this annoying, difficult, nasty, ugly problem that nobody wants to think about,
Yeah. Yeah.
that's my moat, right?
Exactly.
So
Yeah.
I think we also, in a way, we need to go back to that word incubation instead of, I don't know, I don't know if you guys do this, but there's the big debate of, is it acceleration or incubation? And I think
Hmm.
for some reason, acceleration became the better thing. I don't know why. I think we need to go back to incubation of
Mm.
just have a warm and fuzzy, cozy place where you can build your company. until you're ready to fly. When you're ready to fly, you can accelerate, but don't push the baby bird out of the nest too soon.
That's very interesting. So you worked across different sectors, right? So fintech, AI, software as a service, GovTech. Why do good Canadian startups fail, even when the tech is better than their global peers, right? So
Yeah, I think that it's a sad question to ask because it's true and it's a sad state of affairs. I think that um, let me answer it this way: Canadian founders are just as good as anywhere in the world. Um, they're the right education, the right mindset. They come from all around the world, um, and so I think that the talent pool is not a problem. I think the technology is not a problem. I think that you know when by the time that they go out and compete with other American or Asian or European startups, Canadian startups are already behind. That's the problem, right? They're like they're on the basketball team, but they're all like 5 feet tall, and everyone else is 7 feet tall, and it's because they haven't been given enough vitamins earlier in their life. So procurement again, we've talked about this. They had another $1 million in revenue, they'd be bigger. And not only just money, by the way, right? That million is $1 million of learning, right? Early access to data, customers, falling on your face, pivoting. Um, they're undercapitalized, which procurement plays a big role in that undercapitalization. And undercapitalization is a problem because we just talked about failure. Well, how do you fund failure? You have to have capital to do that, right? And having a risk averse country is killing innovation. Right? Not enough people writing checks to fund failure. Not enough people buying technologies that are early stage technology. Or, early stage tech is by definition risky and too slow. I mean, the if we think back to 100 years ago, like I was in Niagara Falls with my wife. She is a fashion entrepreneur, so she makes shoes, and we're doing a photo shoot in a power station underneath Niagara Falls, right? So this imagine like hydropower generator. It's massive, but the incredible thing about this tunnel and this power station, it was built in 1901. And so you imagine it was horses and pickaxes and dynamite. And really that nobody really had built something at this scale before in the world. And so they built the entire thing, chiseling down 200 feet, um, including inventing the turbines and the electrical generating, all the infrastructure. They built it in 4 years, right? No, and there's many examples of about like building things fast. The one of the founders of Stripe wrote a great blog post about this. But part of the problem is that we've lost the ability to build things quickly, and so we just think, well, if we need to build a highway, it's going to take like 15 years to build that highway. 100 years ago, people built it in like 6 months, right? And I think that mindset is something that is a problem because the world is getting faster. But it's exactly the mindset that I think startups can teach. Like startups, can go quickly, and I think that Canadians need to learn that we are slow. We're very comfortable. We love our country, greatest country in the world, just like everyone believes. We're slow, but we also have this incredible bunch of people called founders who know how to go quickly. If we work together, we can help them go even faster through doing business with them. And then they can teach us how to go faster. And we can get rid of this mindset that slow is comfortable. Slow is okay, right? So I think that's what I think is the biggest problem.
Raymond, we reached the point of the fastest part of this podcast, the exit or die rapid fire. So one sentence answer, please. And I have 5 questions for you.
Okay.
Most underhyped city in Canada for tech?
All cities in Canada are underhyped.
Okay. One founder trait every investor secretly looks for?
They shouldn't look for any traits. I think that, outlier is not a trait, right? Outlier is the opposite. I think they need to put aside their
Mm.
the checklist.
Yeah. Then the worst advice what founders still get?
Either fundraise or let me see your financials. I think that this early love of like trying to be a bigger company in small pants is the worst advice. You should be a small company.
Yeah. The best signal a startup is fundable.
Yeah, there's something really difficult that they have achieved, right? That's what traction originally meant. Traction doesn't mean speed; it means grip. So I think that there's something, and unfortunately, it's difficult to find because it's not standard. But at the heart of every startup is one thing they've done, which is really, really, really hard, and that one little thing is starting to work.
Yeah. And my last one is, what would you build tomorrow if you had no restrictions?
Where I am in my career, I don't feel like I have restrictions. So I'm building Source Canada. I doing it by myself. I've got freedom to operate there. I think that if I was like more like retired, I would focus on startup data, which I'm not going to do because I've done that in the past, and it's like a nonprofit organization. But we've talked about a lot of things like failure, but we don't know. We don't know anything about startup failure because there's no data. And so I'd say if I were to do one thing, or maybe encourage you to do it, and then I'll be an advisor, is we need some better data about our startups. Otherwise, we're just talking about opinions.
Yeah. Raymond, great insights, great learnings. If you could write one sentence above every Canadian corporation's procurement portal, what would it say?
Wow, this is a great one. Working with you will help us. That's what I want their portal to say.
That's great. That's definitely a great one. Yeah, unfortunately, Raymond, it's the end of this episode. Really, really big thank you to share all these learnings, all these great insights, and also not just for building companies, but for building the bridges Canadian tech actually needs and to survive and scale. And I definitely think that we here from Europe, as well here from Austria, should have a look on that because we have the same problems, we have the same hurdles. We have also to work on such gaps. And yeah, my message is to all the other founders outside there that don't just build to exit, right? Build to be used, get first clients, and so on. And if your home country won't buy what you have built, maybe the real problem is not the product. So that's my last sentence. Raymond, thank you so much to be my guest.
It was great. It was a great conversation. I learned a lot, and I echo what you said that this is not just something we're doing for Canada. Let's work together. Let's help each other out, and I think the world is a better place when we support our innovators.
Yeah. Thank you so much, Raymond, and bye to our listeners, and see you soon.